I'm going to show you a simple trading strategy that you can fit in and around your current lifestyle that will make you money. Trading does not need to be overcomplicated, which I see day in, day out. Trading needs to be simplified. The strategy I'm about to show you, of course, has many advancements, but this is a basic outline of how you can get into the markets, risk managed in a safe environment, and start understanding how markets work, testing yourself emotionally, but also making a few quid. Before we start, guys, make sure you like, follow, subscribe, everything else. And of course, visit our website, www.financialmarketsonline.com, where you'll see a wide variety of trader training programs, mentorship programs, funded account opportunities, and trading qualifications. So let's get into it, guys. There's three main techniques or three main indicators we use for this strategy. We use moving averages, stochastic, and we identify key levels of horizontal support and resistance. We're not going to overcomplicate it now. A lot of you guys will be completely new, brand new traders. So as I said, there's tons of advancements that we can really get into this, get in earlier, break down smaller time frames, reversal patterns on smaller time frames, inside bar breakouts in between different phases. But for now, let's keep it simple. So the first thing we want to do is position ourselves on a daily time frame. The daily time frame simply means that each bar that we're looking at represents one full day. So the market typically opens Sunday 10 p.m. and closes Friday 10 p.m. That's FX-wise. Each individual candlestick has a daily changeover at 10 p.m. each evening. So today is Thursday 10 p.m. We start today closes and we'll see tomorrow's candle open. You'll notice that if you're trading MT4, this terminal that I'm showing you now is priced 2 hours ahead or timed 2 hours ahead, hence why it's midnight on the platform, 10 p.m. GMT our time. So find yourself on a daily time frame. That's going to remove the noise, the mess, the crap, all the stuff that gets moved around by news and the volatility throughout a trading day. So the daily market kind of overrides all of that, shall we say. We sit tight on a daily time frame. The next thing we want to find, and obvious is a key word here, is obvious support and resistance levels. I don't want you overcomplicating it, looking for supply and demand zones and everything else. Let's just keep it real simple for now. To identify a horizontal level, if you are a brand new basic beginner trader, I want you to focus on looking at round numbers. So round number in this case here is Aussie dollar, and I'm showing you this because we took this trade here on the trading floor in Chelsea. The round number level I've identified by eye quite quickly is 0.6850. As you can see on the right-hand side of the chart here, we've got all of our pricing, and after the point, you'll see 5 decimals. We always remove the last one. So you work to the 4th decimal, which is a value of 1 pip. So in this case, it's 0.6850. For me personally, I'm typically an intraday trader. So the levels that I plot are based on round numbers being 00 or 0.50. Relating that back to a daily chart, if a level's strong, it will respect on all time frames because you're sticking to a certain price. So what I can see here is a horizontal level up at the top of the chart at 0.6850. Now, we want to see a minimum of 3 touches. That's when price action interacts with the level, moves away, comes back to the level, typically like a magnet, moves away. 3 touches are not 3 individual candles that are just touching the horizontal level. It has to reject the level, go away, come back, reject the level. And that brings on cyclicity. So you know over a period of time, the market's been pulled back into an area of interest, let go. Back into an area of interest, let go. That enhances our probability in decision making. If price has been up here more than 3 times and failed to trade and stay above this level, the probability is it's not going to get above this time. So the longer, the stronger. The longer you plot your level and you go back years and years and years, and the more touches you get, better, fantastic. The stronger the level that may be. And it's line of best fit. So you have to, again, draw it to get the most amount of clean touches. Don't just draw it and move it around to make it look pretty. We want the most amount of clean touches. For me personally, it's in and around a round number. That's going to help us build our parameters. So allowing us to find our upside potential and our downside potential. Essentially, you're blocking price action into an area where you can start to decide where you want to trade from and to. This strategy typically goes back to the old-fashioned saying of buying low, selling high, which all of us would have heard over our childhood, perhaps. Once we identify price action, which is the candlestick, this being a daily chart, every day we get one bar, come meet our horizontal level, we then want to see if price breaks it or fails to break it. Following the pattern here, which we can see, and again, a couple of times price has failed to break 68.50 and stay above. You've got a few attempts of price action trying to get above. It simply is not strong enough. Price actions pull straight back into the move, and we go lower and test our lower level of support, which is priced in at 64 here. So you've got a nice range between top and bottom. Price action comes up again, fails to break it, rejects it. Now we're on red alert. We're interested here. How do I get in? Because how I've positioned my horizontal levels here, I'm aware I'm at the top of an upside. I'm at the roof. I'm at the ceiling. I'm at the top of the period where price has been trading between. When price starts to reject, again, this is where the advancements come in. There's a lot of early entries here, but again, if you're brand new, you're a beginner, let's walk before we can run. Let's take our foot off the gas and make sure we're getting in trades when the market's moving, not trying to outsmart such a huge market. As price starts to reject the horizontal level, this is when we bring in the stochastic. The stochastic's an oscillator. Many usements for using the stochastic. We're going to use the figures 1433, and we'll come on to that at a later stage. What we want to see with stochastic, which is this tool at the bottom of the chart, is whether price is overbought or oversold. This just helps us understand that the market's hit that ceiling and it's failed to break it for a reason. We need a little additional confirmation that price is going to fail to continue going higher, and we are making the right decision to look at shorting this market. So as price fails to break our level, we want to see where the stochastic's positioned. You can see it's in percentage value. Anything above 80 to 100 is overbought territory. Price is failing to get any higher. Buyers are running out of steam. We want sellers to come crashing in. When price is below the 20, so in between 0 to 20, showing us that the sellers have run out of steam, buyers are kicking back in. We simply want to look for that hook. If it's hooking over the 80, it's agreeing with our time to sell. If it's hooking under the 20, it's agreeing with our time to think about buying, okay? So if we're hooking over the 80, time to sell, below the 20, time to buy. Again, let's think about real basics here, which is what this is. So we want price rejecting horizontal levels. We want the market being overbought, oversold. If price is in a position where we are overbought, oversold, we have a trade on our hands. So now, depending on trading experience, will really depend on. So the stochastic, once again, as a reminder, guys, sorry there, if we're breaking above the 80 and hooking over the 80, in between 80 to the 100 mark, buyers are running out of steam. We want to see sellers come crashing in. If we're below the 20 mark, sellers are running out of steam, bringing on some buyers. That's helping us decide, am I in a turning point of the market, which is where this comes in. This is a reversal strategy to some extent. What I like about this, and just to recap, we trade this after 10 p.m., so after the daily close. So this accommodates anyone in full-time employment and anyone who doesn't want the hustle and bustle of trading throughout the day. The beauty of an end-of-day system is you'll probably get 4 to 5 top-quality trades per month. So you're immediately forcing yourself to cherry-pick quality over quantity. You're not going to be trading every day. You're going to be taking high-probable positions based on identifying the market structure. How we then think about entering this position. And again, as I said, we got to think about real basics here. We're bringing in a moving average crossover. So what we've got here is a 5 EMA and a 10 EMA. EMA is exponential moving average. It typically reacts quicker to market volatility over a simple moving average. The 5 is the average price of the last 5 days. The 10 is the average price of the last 10 days. Like any moving average crossover, when a market does crossover, and I use 2050 on a smaller time frame to indicate market direction, when a moving average crosses over, it tells us where we're going. Yes, it's not the earliest entry, but it's a confirmed entry. And you as a beginner need to find the right area to get the turning point, confirm it by the stochastic, let the moving average crossover lead you in. If we're selling, and you can see here, look, the yellow coming below the purple. On the left-hand side, look, price hit our level at 0.74. You've got the yellow crossing over the purple, up it went. Yellow below the purple, down it went, and so on. When we get that crossover, that's when you need to think about taking a trade. 10 p.m. that evening, when the daily bar closes, if we're selling, we want to look for the first red seller's bar to close back below the crossover. That's when you pull the trigger to take your trade. As an example here on the left-hand side of the chart, we've got a nice big green bullish engulfing candle. Yellow crossed over the purple. That would be your indication to buy if the stochastic was in a position. I chose this because we took this on the trading floor and some of the boys held this for a good few weeks. When we get that crossover, again, this here would be the first red seller's bar. Your entry would be a sell stop entry, 5 pips below the low of the candle. Your stop loss as a beginner is typically 100 points above entry. So we'd be looking at 100 points above entry. So you'd be looking at 67.94 as your stop loss. So in and around here, when we're looking at take profits, for an end of day reversal, you typically let the market run. The first point is to get 0.5% of profit, 0.5% in front, bring your stop loss to break even. And then every percent of growth, you manually click and drag your stop loss and follow your profit until the market turns and stops you out in profit, essentially. So here's a great example here. I'll just go through some of our majors. You look at dollar Swiss. Dollar Swiss is fantastic because historically we swing in quite large ranges. So what you want to see here is, look, again, a breakdown into 85.30. When we hit our level of support, the stochastics under the 20% mark, telling us the sellers are running out of steam, buyers are hooking back in. We need to wait for the cross. The first bullish buyer's bar to close above the cross is this one. So your entry goes 5 pips above the high of the candle. Your stop loss is 100 pips below entry. So again, where are we? About 84, 84.58-ish. Brilliant. So that would be your stop loss. And again, you'd still be running this. You'd still be running this trade live. I mean, if you held it up to the high point of 660 points in front, I haven't got the patience to do that, but some of you will have. In terms of looking at realistic targets, 3 or 4 to 1's about average for this type of strategy. Of course, yen, when the yens really kick on, you can imagine how well, again, if you've got patience and you're disciplined to hold positions and remove emotions and sit back, some of these yen pairs, when yen is incredibly weak, collectively all yen crosses move together, and there's a lot of reversal, typical this style, opportunities when we see those turns. Again, look, price hit support 142, nice round number. Price, when it hit support, was in agreement that we were below the 20% mark, hooking over. Sellers running out of steam, buyers kicking back in. Entry goes 5 pips above the high of the candle that closed above the crossover. And if you run it into the highs, you was 1,655 points up in 80 trading days. Hell of a long time. But if you're looking at more realistic terms, when market starts to range, consolidate, this is a phase 2 of a trend now. So you can make the decision whether you hold it throughout the trend or you bank, let the retracement come in and get back in at a lower price. When it started to consolidate, you can see again, look, 430 odd points in 11 days. Start to have a look at this yourself. Rule number 1, plot your levels. Minimum 3 touches, longer the stronger, line of best fit, round numbers, or 50. One market price action hits a high point. Think about extremes. Don't just plot levels here, there, and everywhere. You want to get your ceilings and your floors, your tops and your bottoms. So you can say, wow, it's an extreme. Price isn't familiar up here. And every time it gets up here, it rejects and fails to get any higher, and we get a nice drop off. And that's what we want to see, typically entering at the start of the reversal. So level, stochastic, when you meet that level, crossover, again, not the earliest of entries, but for you as a beginner, it's just going to allow the market to actually confirm it's going before you get in. Wait for the crossover. If you're selling, big seller's bar to close below the cross, entry 5 pips below, that's a sell stop order. Stop loss 100 points above entry if we're selling. Take profit, let it run, start to work out your pivots, other levels of interest, any cyclicity that you might want to target, previous low, previous high, or any areas of interest or stalling points that you visually see. When the market gets to this area, it starts to consolidate. That'll typically be time to get out, bank your profits, move on. So this is an end-of-day strategy. I hope I've given you a real basic introduction. Again, there's so many advancements to this, but if you're new to the markets, just get yourself in and out safely. Average 4 to 5 trades on a monthly basis, quality over quantity. You're taking trades on a daily time frame. You're taking trades after 10 p.m. when you get confirmation of the previous close of the day. Therefore, it's not going to change color, size, appearance, nothing. The new day forms, and because it's had seconds worth of activity, it's minimal. You can barely see it. You're working off the closed candles the previous day because it's 1 minute past 10 or whatever the time may be. And you do not need to interfere, touch, play, or do anything until 10 p.m. tomorrow when the candle closes once again. That's allowing you to have a hands-off approach. If you're in full-time employment, perfect. If you work 9 to 5 and you travel a couple of hours either side, you can't intraday trade, and you're going to become a very inconsistent 50-50 trader if you're trying to work a little bit, trade a little bit, miss that bar, getting a bit late. It's not discipline. Remember, trading's a profession. You can't just put a couple of grand into a trading account and think you're going to get rich quick. It takes time and perseverance and most definitely discipline. So start by being disciplined in yourself. If you're going to be a trader, trade when you can give 100% thought to being a trader, to analyzing, to executing, and so on. So this is something you can do in the evenings. Be patient. Test yourself to be patient. Of course, first point of call, 0.5% in front. Stop loss to break even. Reduce any risk you physically will not be able to lose if your stop loss is at break even. And then let the market run. This system's great for yen crosses, as mentioned. We've got some great opportunities coming up shortly. If you look at some of the indices as well, I think the DAX has been okay. You can imagine DAX has been trending quite some time now. You can see here that move down into 68,000 when price hit the level of support. Not quite a double bottom. Price did break the low on the engulfer and move back higher. So we did actually have to wait for a cycle if you're a trend-based trader to confirm the move back up. Rejection of 68, stochastic in line oversold. Where's the crossover? It's there. First buyer's bar close above the cross. Fantastic. 100-point stop loss. And again, I mean, you're looking at nearly a 700-point move there in the space of 30 days. So this is, again, let's call this 20% of where the system can get to. So if you get this, if you understand it, or simply like the idea of not being forced to sit at the screens all day, work in the day, have your passion throughout the day, do what you want, dog walk, lunches, coffee, whatever it may be, football. Come home, let the day settle, 10 p.m. pass, daily close, new bar opens, what reversals are in play? What markets have hit an extreme level of support and resistance that we think is going to turn? We confirm it by the stochastic, we execute once it's moving, so waiting for the 5 and 10 crossover, then you get in. If you come back to me and can show a good understanding of that basic system, I'll start to show you how to make it better quite quickly. So I hope you enjoyed that, guys. We're here anytime. Drop us a message. Remember to follow, like, subscribe, everything else. Lots is going to be happening on this channel very, very shortly. We've got some great ideas coming up. But guys, just to remind you as well, if you are completely new, get educated. Don't just throw a couple of grand in an account and try and do this yourself. We run a fast-track trading program and offer a 90-day free trial where you can get unlimited access to the trading floor, the trading team, online courses, analysis groups, one-to-one coaching, daily webinars, live streams, and absolutely everything if you work with us and commit with us. So look, hope to welcome some of you on our trading floors in the near future. If you did enjoy this, drop us a comment, and I hope to see you soon. Take care, guys. All the best.